Under Article 4 of the IMF's Articles of Agreement, the IMF holds bilateral discussions with members. Usually, this happens every single year. So typically, a staff team visits the country, collects economic and financial information, and discusses with officials the country's economic developments and policies. Article 4 can also be described as a regular health check of members' economies, and of course, that of Nigeria has just been concluded, and the report and policy advice are published. Reactions have been spewing out since that publication a week ago. So in this episode, we will be looking at the IMF, Article 4, and Nigeria. On the policy with Leah, we strive at all times to take you closer to the policies as they affect you. The name is Leah Katung-Babatunde, of course, and the program is streaming on YouTube at Saban Media Services. We begin the business of the day from the trends table.
The Federal Executive Council (FEC) has approved that all users of federal airports all over the country must now pay tolls at the gates, inclusive of the President and the Vice President of Nigeria. This was disclosed after the two-day marathon FEC meeting that held this week to deliberate and approve a number of policies and projects that will further boost the economy, facilitate investments, and promote the ease of doing business in the country. Also approved is the supply, installation, and training of operators of disabled aircraft recovery system at Murtala Mohammed Airport in Lagos. President Bola Tinubu has ordered the Central Bank of Nigeria (CBN) to suspend the implementation of the 0.5% cyber security levy. Minister of Information and National Orientation Mohammed Idris, who made the disclosure, said the president ordered the suspension following deliberations by members of the Federal Executive Council (FEC). The Central Bank of Nigeria issued a directive to all banks and financial institutions mandating the implementation of a cyber security levy on all electronic banking transactions, which drew up sharp criticisms. Members of organized labor early this week picketed the headquarters of the Nigerian Electricity Regulatory Commission (NERC), the Federal Minister of Power, and the Abuja Electricity Distribution Company (AEDC) in Abuja and their offices in other major cities across the country. The protests by the Nigerian Labour Congress (NLC), Trade Union Congress (TUC), and other affiliate groups were protesting the increase in electricity tariffs for customers in the Band A category. However, Minister of Power Adebayo Adelabo, in a reaction, said the federal government is addressing concerns raised by the labor unions. Dr. Ngozi Okonjo-Iweala, Director General of the World Trade Organization (WTO), has said that Nigeria needs to continue to diversify to attract both local and international investments to boost trade. Okonjo-Iweala, while addressing newsmen after a meeting with the Duchess of Sussex Meghan Markle and other women at the Nigerian Women in Leadership event in Abuja, said policymakers have to think of how to make use of the 1.4 billion African Continental Free Trade Area. She stressed on the need for women to support themselves and improve their positions in the country. The Nigerian Copyright Commission (NCC) has accused the Chief Executive Officer of MTN Nigeria, Carl Tariola, of evading service in a copyright infringement case. The commission alleged that MTN and others used several soundtracks as callback ringtones without the consent and authorization of the original owners and in contravention of the Copyright Act. The legal team of the commission, led by Barrister Gladys Isaac Ojo, made the claim before a federal high court sitting in Abuja. The case was filed by the NCC against MTN Nigerian Communications Limited, Carl Tariola, Chief Executive Officer of MTN Nigeria, Nkeakem Abdulimen, Fun Mobile Limited, and Yaya Maibe. The company has, however, filed a preliminary objection to the suit.
During Article 4 consultations, the International Monetary Fund attempts to assess each country's economic health. Among other cardinal things to achieve is to forestall future financial problems. Here's that conversation with Christian Ebeke, Nigeria's resident representative of the fund. Mr. Christian Ebeke is Nigeria's IMF resident director, and he joins me in this conversation to speak to issues emanating from the Article 4 just published by the fund. And of course, it's been generating a lot of controversy already. How are you taking the heat?
Thank you for having me, and it's a pleasure to be here. And as you mentioned, we just published our Article 4 report last Thursday, and I'm happy to discuss any policy recommendation that we made in there.
Okay, so looking at the recommendations, I would say that the IMF over time has paid a lot of attention to issues around the blockchain technology, AI, and everything that has come with it. I mean, we've seen back-to-back sessions around cryptocurrencies, for instance, and but here in Nigeria, there's an outright ban on cryptocurrencies, but the fund is saying it should be regulated. Can you just give me an explanation of that?
Thank you very much, Leah. I think the issue of cryptocurrency or crypto platform is a very important issue, and for many reasons. One is that the adoption of this crypto, this new technology, is really, really around the world something that young people are really using. Is bringing a lot of benefits, in terms of speeding up transfers, for example. Improving the security around transaction and settlements. It's really a technology that people are embracing and a technology that is going to stay. So this is the starting point. It's not a technology that should be removed from the system. It's actually something that is bringing a lot of benefits and reducing transaction costs. The second point is that yet it's a positive technology. It's something that is helping a lot in financial sector, but also in other areas. But it's a technology that is also very important in the financial sector and may, increase certain risk. One of these risks is that, transaction, thanks to the privacy that is crypto platform brings, transaction can foster actually, anti-money laundering, for example. The financing of the terrorism can pass through this. And Nigeria is one of the countries in the world with the highest adoption of crypto platforms and crypto instruments. So what the report actually talks about is the fact that these crypto platforms in Nigeria should be licensed in Nigeria or regulated or registered, right? The same way the policies are designed for financial institutions, like banks or some of the other financial institutions. They are regulated. They provide financial reporting to the regulator, the central banks, and there is a proper regime for the way they are supervised. The issue in Nigeria right now is that there is not a very comprehensive framework around the licensing of these crypto platforms, their registration, and also the supervision. So what we are encouraging the authorities, and I think they're working on it, is really to ensure that those crypto platforms are not necessarily banned, but I think they can still coexist in an ecosystem where you have proper regulations, proper licensing, and proper supervision, and make sure that everything is really ring-fenced to ensure that anti-money laundering and the financing of terrorism, all these type of practices are really looked into carefully.
Okay, the fund also made recommendations about removal of subsidies, and we actually saw some screaming headlines in the past few days. But then it's coming at a time where the country is still grappling with paying the minimum wage of 30,000 naira. I wouldn't want to give the dollar equivalent of it right now, considering also the currency depreciation. Perhaps you could give me an understanding why the fund feels that way.
I think this is an important question that you're asking, and I think there is a lot of discussion in the public domain about exactly what the IMF recommendation is on this very important point. So you have to start from the fact that this administration came into power a year ago, and when they came in, they inherited a lot of imbalances in the economy. So you had already a very low revenue mobilization in the country. Nigeria collects like last year, 9% of GDP in terms of tax to GDP ratio, one of the lowest in the world. The country was also subsidizing different products. For example, fuel and electricity subsidies, the cost or the price that consumer pay was below the supply cost of this product. You had pressures on the naira and on the foreign exchange market, and inflation was already trending upward. A lot of imbalances inherited by the administration. So they came in and they decided to do very bold and challenging reforms. The fuel subsidy removal and the unification of the various exchange windows and making sure that there is price discovery in the FX market. Now, when it comes specifically to the issue of subsidy, you have to recognize, and this is also your point, and I fully agree with you, there is a lot of pain for Nigerians right now, a lot of pain. Food inflation is 40%. Overall inflation is above 30%. The cost of a healthy diet is a new statistic by the Nigerian Bureau of Statistics, is showing you that just to have a healthy diet every day, the cost has risen tremendously over the past 12 months. So there is a lot of pain for Nigerians, and that's why in the report we insist on the sequencing of reform. Now let me go back to the subsidy and why sequencing is important. What we are saying in the report, and I want it to be very, very clear and simple for people to understand, we are saying the administration has to accelerate the delivery of support to vulnerable households. This is the first thing. This is the most immediate priority of the administration, is to address food insecurity and address the cost of living crisis. So delivering the direct payment to vulnerable households, there is a scheme now sponsored by the Ministry of Finance and the World Bank, providing support to 15 million households in Nigeria, which is approximately 65 million Nigerians. This scheme has a new innovation, is that the targeting is better, the payment is faster because it's digitalized. People will now receive money into their wallet, but it's also verified carefully because they're using national identification numbers. So this targeting is for the most vulnerable part of the population who cannot necessarily cope with the reforms that are being implemented. This is the targeting we're asking for. This is a strengthening of the social protection system that we're calling for. Once you have done it, once it's delivering, now you phase out the costly fuel and electricity subsidy. So again, the sequencing and the packaging here are very key. You deliver on the social protection system first, then once it is delivering and is working nicely, you now phase out gradually the fuel and electricity subsidy in a manner that is consistent with your social agenda, is protecting the poor, but is also making sure that the foregone revenues that you're losing now, remember, the fact that petrol prices are now at the pump at the lower price compared to the supply cost, the fact that on average electricity subsidy paid by Nigerians are lower the price compared to the supply cost of the production of electricity, this is creating what we call in our jargon implicit subsidy. This implicit subsidy, we are saying, you phase them out in a manner that protects the most vulnerable. You do it gradually, but before you even do that, you better strengthen your social protection system. And the initiative of the Ministry of Finance together with the World Bank is a step in the right direction. Right now, it's 15 million households, 25,000 naira each month for 3 months. We think that this could be a blueprint for something bigger and maybe more permanent down the road, more agile whenever the economy will face a shock. So this is our recommendation on subsidies. We are not calling for a removal without having the social protection system in place so that you can then phase out later.
Okay, so what is out there is that the subsidies are gone and then the safety nets are not there. The last time we tried to do safety nets, it didn't end well. And I'm sure you're aware of that. And personally, I already feel vulnerable if I look at my bank balance and see the amount of bills I'm having to pay. So one will wonder if 25,000 per household is going to take them anywhere, or then if it was going to be better to say, perhaps think about getting the environment to work where these people can actually do business, invest, and make some money for themselves rather than waiting for handouts.
So what's the question?
So that's an observation from me. So the question here is if you think it is something that is achievable.
The key challenge here, Leah, is really the targeting. How do you target better so that you don't create a scheme that is even more costly for the government and for Nigerians in general than what you try to achieve? So making sure that first you identify carefully who the most vulnerable part of the population are, who are they? The second way of how do you make sure that the money that leaves government accounts to reach those people goes there without any leakage in between. So counting on digital tools the way they're doing now, ensuring that people have proper identification, they have wallets, and they can get the support faster and without any leakage in the system is one way of doing that. The second point I want to mention is that reaching out to those people through a strengthening of the social protection system is just one way. The second part is also clearly that restoring macroeconomic stability is another way of actually protecting the poor. When the central bank announces that it is embarking on inflation targeting, the focus of the central bank is really to bring inflation down. This is again something that is pro-poor because inflation is clearly one of the most important tax or the most difficult tax on the poorest fringes of the population. So the tightening of financial conditions by the central bank, trying to stabilize the naira through various foreign exchange market reform that they started in January. This is going to provide a stable inflation environment. It's going to provide a stable exchange rate, which again is going to help the average Nigerian. What they did on electricity subsidy recently, they increased the prices for premium consumer while leaving for now the prices or the tariff for the older consumer, the most vulnerable. This is one way of making sure that your reform has a human face. Your reform takes into account the vulnerability of certain part of the population. So we were actually pleased that they integrated this approach in the tariff adjustment, starting with who can actually pay, the people who can pay, the premium consumers. The other point is also that policies need to be coordinated better. Fiscal and monetary policy have to work together so that macroeconomic stability is restored faster. Monetary policy is appropriately tightening financial conditions. The CBN and the MPC are working towards this. They have tightened already. Fiscal policy is working with the Presidential Committee on Fiscal Policy and Tax Reforms. They're working towards an agenda whereby domestic revenue mobilization will go up. And I think what they're trying to do is to start not necessarily with an increase in tax rates, but to make sure that compliance is really, really enforced, making sure that people who need to pay their taxes. And why are they moving into that direction? In our view, it's very important that Nigeria collects enough revenues, but then to use these revenues appropriately to fund what? To fund health, infrastructure, security, education. These are the spending that you need to foster long-term growth. We have talked since the beginning of the show about short-term measures to alleviate the pain, short-term stabilization, but there is also a growth agenda that needs to be clearly laid out, and this will start with raising domestic revenue for the government to be able to fund what are the most critical and more productive spending lines in the country.
Now we're talking about the monetary policy. Before I let you leave, perhaps I would ask this question because it also featured in that report about the independence of the central bank. What will be your take on that, ensuring that they are functioning without any interference at all?
This is an excellent question. You have to start with the first point is that central bank frameworks and the operational framework that governs central bank activities around the world is something that we judge at the IMF as a macro-critical issue. We have discussions with many central banks in our membership about the way they're conducting their operations, the way their policies are formulated around a specific framework. So this is something that we see as macro-critical because the central bank is just too big to be left alone without proper frameworks that are in place and to be protected away from political interferences. The central bank is a key is an important institution in a country. So central bank independence in Nigeria has to be preserved, especially when the country is faced with tremendous policy trade-offs. Macroeconomic stability needs to be restored. Some of the measures that the central bank can take can be at times unpopular, but they are actually extremely important to restore quickly macroeconomic stability, bring inflation down, making sure that the exchange market is functioning well. So those reforms are difficult reforms for any central banker or any central bank institutions. Now, the issue that we see in Nigeria is that right now there is an ongoing debate in the National Assembly about amending the Central Bank Act of Nigeria of 2007. We think that it's very important that amendments done around the Central Bank Act of 2007, that those amendments still protect the independence, the operational independence, independence of tools of the central bank, the functioning of the central bank. This independence has to be protected while these amendments are being done. And what is the reason? The reason is that for a central bank to be effective in achieving its mandate of price stability, the central bank should have the independence of using the different tools with the Monetary Policy Committee in order to achieve this. Having political interferences, having a central bank governor and the team that is not really free to do what he or she is asked to do is something that is problematic in modern central banking. So having this independence is critical. The second point is that Nigeria is a large country. Nigeria is a big country around the world. So whatever amendments are going to be done to the Central Bank Act will be analyzed, will be scrutinized by international investors, by global markets, and making sure that those amendments are done in a way that protects really the independence of the central bank is very critical. Otherwise, there could be implications in terms of the perception that global investors and the markets will have on Nigeria. So it's a very important issue, and especially at the time where the central bank is actually doing important reforms and the central bank is refocusing its attention to one of the critical issues, which is restoring macro stability, especially bringing inflation down.
Okay, I must sincerely thank you, Mr. Christian, for sharing those insights, and it's a breath of fresh air, I would say.
Do you know it takes on average 70-something days to actually start from packing to exporting that container?
We had 110 textile industries in Nigeria. They crashed.
Any government that does not have sufficient output in terms of exports to combat with a global currency, the dollar, is not just visible.
People keep saying that, FX is interest rates is driving us crazy, but you can't have FX if you don't earn FX.
For you to liberalize, for you to make it willing buyer and willing seller, you must be able to have some buffers.
Manna doesn't fall from heaven. We can't expect external influences to do the magic for us.
Simplify This is next, and from there we go to the markets. For more on rates from markets across the country, do well to log on to our sister website. It is www.marketnigertv.com. We'll have all the details there for you. Don't forget this episode and every single one we have had since inception are available on YouTube on the channel, and it is Saban Media Services. Do well to subscribe, leave your comments, questions, and suggestions because we value them to help us serve you better. Until we come your way again, same time next week, don't forget that the duty of building a viable country lies in the hands of every citizen. So play your part, be safe out there, and God bless Nigeria.